Hello and welcome to this video brought to you by ASWATAX. My name is Omar Aswat, Chartered Tax Advisor. I just wanted to make a quick, let's see how long it'll be, but a short video hopefully, outlining 3 advantages of family investment companies. Now there are many more advantages, and maybe perhaps at some point I will shoot a part 2. But I wanted to outline 3 particular advantages of family investment companies. And we know that in the last few years, FICs, FICs have become more and more popular. They were so back in the day, this is before my time as well, to be fair. Trusts were the go-to when it came to certain tax planning, for example, inheritance tax planning, estate planning, and the rest of it. But back in 2006, the rules tightened up, and but that's still around nearly 20 years ago. But just a couple of years ago, HMRC disbanded the investigations unit looking into family investment companies, whether it's tax avoidance, evasion, whatever they were trying to look for. They disbanded the unit, meaning they've effectively, it's the green light. So family investment companies have become extremely popular, and they work extremely well in particular circumstances. Any tax planning has to be bespoke. It can't just be you read something on the internet and what you've read on the internet, you try to fit it in your situation. It's the other way around, where we look at your situation and then look at the strategies available and then bring it back to your situation. So that needs to be kept in mind. Sometimes I do have clients whereby they've read something on the internet, and sometimes they're right. I'm not going to say, if they bring their information or their research that they've looked into and they've spent good time looking into, and it works for their particular circumstances, then that's fine. But I'm just saying, I've also had instances where somebody has read something on the internet, and then they sort of telling me that this is what needs to be done. But in my head, I'm thinking, with my experience and my technical capabilities and knowledge, that this doesn't really make sense for you in your circumstances, or it doesn't help you in the long run. So all that needs to be considered. When it comes to family investment companies, this is something we regularly get involved in, we regularly look at, and this can be for smaller estates, 1 million, 2 million, 5 million, and then we're looking at larger estates as well. So family investment companies are quite multicultural. That's the word that comes to mind. But they can be adapted for individual and family circumstances, whatever they may be. The first key benefit, or one of the key benefits that that individuals and families really enjoy, would be around the matter of control. So for example, if you're gifting assets into trust, so once the settlor gifts the assets into trust, then now it's the responsibility, or it is legally owned by the trustees, that asset, whether it's cash, property, stocks and shares, crypto, whatever it is. The control is lost. And that's why family investment companies, a key advantage would be the fact that, although you're transferring your wealth or your assets into a family investment company, the way we can structure the shareholdings, the articles of association, the directorships, the control can remain with the settlers, those who introduce the assets into trust. So that's a very, it's not a tax benefit, but it is a real life benefit that many individuals, parents, grandparents particularly enjoy. The second advantage of a family investment company would be the fact that, again, this goes with the control, but the fact that there's a lot of flexibility. Now, the flexibility is where all the planning takes place. And this is in regards to the shareholdings, how we bring the next generation into the picture. The articles of association, effectively we have voting rights, dividend rights, capital rights. There's so much that we can do with that. And the flexibility is around, for example, income extraction. So assets held in a personal capacity versus in a limited company. A limited company allows for multiple share classes, alphabet shares as they call it, and this allows for the flexibility in terms of income extraction, or flexibility around control, again, voting rights, for example. And again, this is another key benefit that many families enjoy. Why? Because within a trust, I keep comparing to trusts, but the reason for that is because the two are sort of similar in that sense, and they are sort of looked at in tandem. So therefore, that's why I tend to compare. But if you're just looking at family investment companies, you have a lot more flexibility due to the structure or the nature of a limited company. I'm just going to add one more benefit. So the third benefit, and I'll add the fourth one that I planned in my head, but the third benefit that just come to mind is, again, this is a comparison with trust, but generally individuals and families are much more familiar with limited companies rather than trusts. It's just one of them things. They're just more in our face, and therefore individuals and families prefer limited companies compared to a trust. And then I'd probably add that the compliance, broadly speaking, is less with a limited company in comparison to a trust. Broadly speaking, it depends on what's going on within the trust and the rest of it. The fourth, which was supposed to be the third, but it's become the fourth now. The fourth key benefit of introducing assets into a family investment company in contrast to a trust is the fact that there are no inheritance tax charges on the transfer into the trust. Yes, we have to look at capital gains tax, stamp duty, land tax, and the rest of it. But this is not, I'm not preparing a tax advisory report or, but I'm just making high level points. So CGT, SLT still need to be looked at, but a transfer into trust, you'd probably be limited to your nil rate band, and above that, you'd be subject to 20% inheritance tax in lifetime on assets over £650,000. That's if you and your wife, for example, have the available nil rate band of 325k each. Values above that would be subject to 20%. A transfer into a family investment company does not attract any inheritance tax charges. There's loads of planning that can be undertaken. There's loads that we can do. There's loads that we do help our clients with. So if you require assistance in advice and the setup, the implementation, getting the legal documents in one place, the company's house filings to effect the structure, we don't just leave you halfway. We can look at the whole transaction or the whole process, and you can keep that with us. So if you require assistance, or if you require assistance in setting up a family investment company, then feel free to reach out. My email address is down below. We are chartered tax advisors regulated by the Chartered Institute of Taxation. If you found this video beneficial and useful, don't forget to like, comment, share, and subscribe. I shall speak to you soon. Have a good day. Thank you.